let's talk about what lies ahead for whether it's exchanges, whether it's market participants, or of course investors themselves. We're talking about all the ongoings in the futures and options market. Retail investors in India lost over 1 lakh crore rupees in the derivatives market in FY25, and about 91% of these individual traders lost money in FNO. This is according to, of course, the latest study released by market regulator SEBI. Let's discuss this and the way forward with Gaurav, Seth, Managing Director and CEO at 5 Paisa Capital, and Ashish Rathi, Whole-Time Director at HDFC Securities. Ashish and Gaurav, thank you very much for joining in. There's just so much going on in the futures and options market. The last 1 year, we've seen the regulator tighten a lot of the screws. We've had the whole drama play out in terms of expiries, now reducing the products to one per exchange. And this morning, there are reports suggesting, I think the Mint put out a report, that maybe they'll look at, instead of a weekly expiry, now a fortnightly expiry, if they're not satisfied with the reduction in just the sheer amount of speculation. Your thoughts on, first of all, whether the F&O market needs further tightening? Ashish, let's open with you.
So in terms of tightening, you will see a lot of measures have been taken already by SEBI. I think so there's an October 1 circular wherein 5-6 measures have been taken, which came into effect mostly in the last quarter of last year. But yes, in terms of tightening, so the major concern is on the retail side. So one kind of tightening which we can look at is a product suitability test. Depending on the risk appetite of the customer, maybe he is allowed to take positions in derivatives. I think so that is where we will reach a situation wherein, okay, you have the risk appetite, then you are allowed to take that risk and you understand the risk better. I think so that would be a good thing that which SEBI can look upon it. In terms of structural measures, a lot of things have already gone about, making from 5 expiries to 2 expiries, then increasing the margining, upfront collection of option premium, plus all these market-wide limits. A lot of measures are already in place or still in the process of implementation. So we can wait and see for some which are still in the process of implementation, what is the impact. But yes, in terms of retail investors, product suitability test is something which SEBI can look at introducing.
Ashish, this is a very interesting, just Ashish, allow me to come in over here. This is an interesting concept you're bringing in. Yeah. I don't know, does it exist in any other major market worldwide? And then the onus will be on whom? Maybe SEBI can design a test. How do you design it? How do you decide if, F&O trading is suited for me or not? And maybe it is for Prashant, maybe not for me. Anyway, we don't trade. I mean, that's aside because of our regulations, internal regulations. None of us actually trade in the market. But how do you decide it? Will the onus be on the broker? Can it really be a feasible solution?
Yes, it can be a feasible solution. So you take the inputs from the customer, depending on your net worth and everything. Then you take the risk suitability. Okay, so how much is the risk you can bear? Basis your risk appetite, you may be quantified as a high risk. You are ready to take high risk with. And basis that, and depending on your net worth and everything, you will be allowed exposure in derivatives. So that can be worked out. Maybe in stages, at an initial stage at a lesser level, at a later stage, maybe at a higher level. So these things can actually, then what happens is the customer himself is declaring, yes, I'm ready to take riskier bets. And then even if he make losses, the understanding is that he has understood it much better.
All right. That's an interesting point that you're bringing to the table. Let's see whether that gets implemented or not. But let's bring in Gaurav in the conversation as well and to see how things have changed. Gaurav, there was a serious amount of trading and speculation in F&O that was taking place. And a large part of that, whether it gets attributed to, the underlying equity cult or not, definitely gets attributed to the surge in discount brokers and access to market by itself. Could you give us a sense of what proportion of your volumes right now, traded volumes on 5 Paisa, come in from F&O? How has that number changed over the last few months, ever since tightening has come in from the regulators? And once there is a higher tightening, which is on the cards right now, as discussed by a lot of people, will that impact your business a lot more with options traders looking to come down from here on?
So look, I think I just go back to your earlier question. I think this is definitely a wake-up call, but also in terms of, I see this study coming from SEBI, which was published recently as a follow-up to what was done last year, right? A lot of the tightening and a lot of the structural reforms that the regulator wanted to put in place were already put in place. And of course, that did have an impact, not just on us, but across the industry, and which is a fact to see, right? So the volumes were impacted temporarily. So if you look at, volumes compared to last year, we are lower, and a lot of our peers are lower. But if you look at it from the last 2 years perspective, it's actually higher. So while I think discount broking and platforms like us have played a great role in bringing access to the market, I think what needs to be spelled out here is that whether it is FNO or whether it is any other kind of product, right? I think the mandate of actually figuring out whether this is right for me or not, which I think even Ashish was talking about earlier, instead of pushing it to the brokers, it should also be in terms of, how am I educating the customers? What is it that we are doing as platformers, as brokers, to upskill some of the people who are coming into the market, so they can figure out for themselves. So in any case, after last year, so the moment you log into a platform, every single time, you have an acknowledgement that is done by retail investors, any investors, right? Those 6-7 points which are whether FNO 9 out of 10 people lose money and so on and so forth, right? I don't know how much impact does have on people, right? I think over a period of time, it is for you to self-realize that, right, is this working for you? What is the level of skill you have? What do you need to do, etc. And I think we as brokers and as platforms have to play a major role in that.
No, well put. Gaurav and Ashish, morning. Prashant here. One thing is clear, and then of course, all of this we're talking in the backdrop of that Jain saga, right? Which has happened, and it's kind of still, in a way, amazes me that many are still talking about whether this was. Of course, I mean it'll have to be proved in court, but the simple point that a normal player in the market would try to buy or sell with minimum impact in the price, right? But with the business model itself is to impact the price. I mean, I think that is where that SEBI order sort of comes in from. Let's just Gaurav talk about what else can happen. There are reports this morning, for example, that this is not one and done in that sense. On the option side, the regulator wants to. And we have that report also which shows how many people have lost money. So there is perhaps more action coming in that sense. One proposal perhaps is the regulator may revise the weekly contract expiry schedule. So from the current weekly, they may go to fortnightly. Gaurav, any thoughts on this?
Well, I would not like to comment on what the regulator is thinking. I think they probably know better than us, and in terms of like what are some of the decisions they want to take for overall market stability. However, I would like to make a point is that again, it really boils down to people figuring out for themselves, where they are in the spectrum, right? If you look at, and I actually, to be honest, I have not read every single page of the report, but I was glancing through it and went through this 33-page report. Where there is a statistic which shows certain correlation to how much money you are making based on what your income level is, right? As an example, declared income now on paper, and what that shows is, while you can't say that people with high income are necessarily better traders or people with low income are necessarily inferior traders, but the fact is how much thought you are putting into what you are doing. And actually be clear about where you are in the spectrum, what you need to do to get to become a profitable trader, and so on and so forth. I think once that culture comes in, where people sort of self-analyze over, I mean, there is enough data out there. There's no dearth of data. Like anyone interested in figuring out.
No, Gaurav, you've done this a long time as well. This is, if reports, I mean, and this is, I'm not saying this is not necessary, absolutely necessary, but it's at the end of the day, it's an addiction. I can put it bluntly. You lose money, you make money, you can't step away. And I think we all kind of recognize that. So that is the reason why I'm saying, I mean, as some of the news reports suggest, they perhaps may look at additional measures. Awareness, self-realization, etc., as both of you said, is one thing.
That we need to have for a lot of things in
life.
For
a lot of things in life.
But we may not.
But it doesn't happen.
So you need regulation.
So, Gaurav, again, my point is, you said, yes, it is for them to decide, but you think, the cost-benefit in that sense. Some would say, what about liquidity in markets, depth of markets? Others would say, perhaps, this is more important. So that's what my question was, Gaurav. Gaurav?
Yes, sorry, could you repeat?
No, my question was with regards to going from weekly to fortnightly, the argument, the cost benefit in that sense. How do you look at that? If this were to happen, of course, the regulator knows best, as you began by saying, but what is your view?
So my view is that obviously it may have some impact on the volumes in the short run. But as we've seen, if the data is to anything to go by for the last 1 year, volumes start to return to normal in the course of time. I mean, if you're asking me a specific point, what my personal opinion is, whether it is going to be weekly to fortnightly, yes, it could have an impact. Definitely, it could have an impact on the volumes in this segment.
Sure. And, gentlemen, what we've been discussing is so far the regulator taking all of these tightening measures to curb what it feels is perhaps excessive speculation leading to retail losses. And that is a separate debate. I mean, whether the regulator should have a moral view on this or not. But what my next question is that post the Jane Street episode, does this get another layer altogether? I mean, would we perhaps see tighter regulation or a change in some F&O frameworks to avoid what the regulator feels was market manipulation and abuse? And would you say, and I mean, I know this is going to play out over the next couple of days, but to say that Jane profited off retail traders and investors, would you completely agree with that? Because that adds a whole new layer of why we need tighter regulation, if that were to hold true in the courts of law. So quick thoughts on this from both of you. Ashish?
So in terms of, probably the episode in hand of Jane Street, they had accessibility to maybe you can say sophisticated instruments with which they did trading. Okay. So right now, if you look at whatever algo framework they could do, it's in the form of HFT, they had sophisticated instrument. And whereas retail currently, as things stand by, obviously effective August 1, they will have accessibility to algo trading and everything. However, that created some kind of an advantage to them. Plus, obviously, their appetite to have large money. Now, that is a structural advantage that they have and they will continue to have. Let's understand that. But however, in terms of regulatory measures, definitely the view is that we may see some measures in terms of some of the sophisticated traders benefiting out of retail investors. That's the understanding which everyone is getting. So we may see some measures. Now, whether these measures are structural measures in terms of making the changes to expiry, reducing the number of expiries, all things, or whether it comes by way of what I said is product suitability test at the retail investor, that needs to be seen. But yes, definitely what I think so after this episode, there could be some structural changes in the derivative. But as Gaurav rightly pointed out, so whatever structural changes are there, in the short term, you may see a blip in volume, but in the long run, again, that it comes down to the same level. See, finally, it is up to people to decide, retailers, while they make losses, but as long as they know the risk about it, then it should be okay.
True. So just very quickly, Gaurav, same question to you. Because of the Jane episode, would you expect any more new stringent measures? And if yes, what kind?
Look, I don't want to speculate here, but I think just logically thinking, you could potentially expect some measures. What they would be, I mean, I'm in no position to comment. But again, I mean, if you look at the data, especially if you're looking at the report, like a lot of, I mean, it is very clear that a lot of the FPIs, the more sophisticated traders on the other side, as a proportion, made higher percentage of profits versus compared to a normal retail trader, right? So again, comes back to the same questions: the level of sophistication, your level of skill, and so on and so forth. So if you have to be in this market for a longer time, what is it that the retail traders do? And especially being a retail platform, I think that's the lens that at least we bring to the table in terms of thinking that, like, how do we do what is necessary for our customers. But what the regulator will do, we will see in the next couple of days or next couple of weeks.
All right, gentlemen, thank you so much for joining in and giving us this view. Obviously, it's at the end of the day up to those who are participating in this to know what their risk appetite is out here. In that, I would, believe that players like you would also, be responsible in informing the clients about what their risk appetite is and the product that you're offering, the risk nature of that product, along with what the regulators are doing to curb this speculation and ensure that everyone participates in this in a fairly equitable and knowledgeable manner, knowing very well what the underlying risk of what this offering is. Gaurav, Ashish, thank you so much for joining in. We'll invite you once again where we have more clarity on what the regulations are post this as well.